Have you ever watched in disbelief as a stock skyrocketed 300% just weeks after you sold it for a measly 10% gain? That sinking feeling in your stomach, that voice in your head saying, "I could have held on longer"? It's the trader's version of heartbreak, isn't it? Today, I'm going to show you how to end that cycle of regret forever with just one powerful chart setup that reveals explosive trends before the majority of traders even notice them. This isn't about chasing every tiny price movement or getting lost in the market noise. It's about developing the most valuable skill any investor can possess: the ability to identify massive fortune-building trends in their early stages. Think about it. What separates the truly wealthy market operators from average traders isn't some complex algorithm or insider knowledge. It's their uncanny ability to spot significant movements early and, this is the crucial part, stay with those trends while everyone else gets shaken out during normal market fluctuations. Has this ever happened to you? You identify a promising setup and take a position. The moment you see a small profit, that anxious voice starts whispering, "Take it now before it disappears." So you sell, pocket your modest gain, and then watch in horror as that same stock continues climbing week after week, month after month without you. If this sounds painfully familiar, you're not alone. But after today, that pattern stops. But before we begin, please hit the like button and let me know where in the world you're watching from today. It's always fascinating seeing who's joining us from around the world. And if you haven't already, make sure to hit that subscribe button and turn on the notification bell so you don't miss any of our future videos. What you're about to discover might completely transform how you approach the markets. Imagine spotting the early signs of a major trend while it's still forming, when skepticism is high and before the crowd piles in. That's the power of this trend recognition framework I've refined over years of market observation. Stay with me until the end, because this isn't just another technical pattern. It's a complete framework for identifying emerging trends during periods when most traders remain doubtful. And that's precisely where the biggest profits lie, in positions established before institutional money flows in and pushes prices dramatically higher. The harsh truth is that most traders aren't ruined by the market itself. They're ruined by their own impatience and inability to distinguish between temporary price movements and genuine trend developments. They mistake constant activity for progress, when in reality, the path to substantial wealth lies in identifying those rare, powerful trends that can carry prices far beyond what most consider possible. Would you rather make 50 trades that net you 2% each, or catch just one 100% move? The math is simple, but the psychology required to achieve it is anything but straightforward. Because true wealth in the markets isn't built by catching every minor price fluctuation. It's created by identifying those rare, powerful trends that carry prices far from their starting points, and having the discipline to stay with them. If you're serious about capturing those explosive market trends we've discussed today, hit the subscribe button now. I share these exact chart setups and psychology frameworks that have transformed my own trading journey. At its core, this approach acknowledges something most traders miss. The market is constantly communicating with us through every price bar, every volume spike, every momentum shift. The problem isn't a lack of signals. It's too many of them. What makes our chart setup so powerful is its ability to filter out the noise and highlight only those patterns with the highest probability of developing into substantial moves. The transformation happens in your trading results when you learn to spot these early signals rather than chasing what everyone else already sees. Behind the scenes of every significant market fortune is this same pattern: individuals who recognized emerging trends early and positioned themselves accordingly, rather than arguing with reality. This hidden truth about market success runs counter to what most trading gurus will tell you. They focus on quantity, more trades, more action, more complexity. But the journey toward consistent profits begins when you stop trying to predict where the market should go and instead learn to identify which way it's actually flowing. Our chart setup essentially serves as your navigation system, revealing the direction and strength of these powerful currents before they become obvious to everyone else. The impact of fighting the market rather than flowing with it is catastrophically expensive, both financially and emotionally. The market doesn't care about your opinions or expectations. It doesn't care what you think should happen based on news, earnings, or economic reports. This revelation is initially humbling, but ultimately liberating. When you align yourself with these larger forces rather than fighting against them, you suddenly find yourself carried along by momentum that others miss entirely. Now, I want to go even deeper into this topic by exploring a powerful metaphor that fundamentally changed my approach to market trends. Think of the market as a massive river with powerful currents flowing in different directions at different times. Most traders spend their entire careers fighting against these currents, exhausting themselves while making minimal progress. But what if you could simply identify which way the river is flowing and position yourself accordingly? The decisions you make in these critical moments aren't just about this trade or that investment. They're reflections of how you navigate life's uncertainties. Are you willing to set aside preconceptions and respond to what's actually happening? Or will you cling to opinions that the market has already proven wrong? If you've ever found yourself arguing with price action or holding on to losing positions because you knew the market was wrong, type "go with the flow" in the comments. I'm curious how many of you have experienced that expensive lesson firsthand. Let me share with you one of the most profound revelations in market strategy, an insight that completely transformed my approach once I fully internalized it. Think about what typically happens before any major trend begins. There's usually a period of accumulation where smart money quietly establishes positions while prices appear to move sideways or within a range. Most traders miss these subtle clues entirely. The hidden truth is that institutional investors leave footprints. When they begin accumulating positions, the chart reveals their presence through specific volume patterns, higher lows, contracted volatility, and subtle momentum divergences, all precisely calibrated within our setup. These aren't random fluctuations, but deliberate actions by market participants with deep pockets and long-term horizons. By the time financial media starts discussing a trend, by the time your neighbor is asking about that hot stock, the smart money has already established their positions. The awareness of these institutional footprints creates an entirely different mindset. You begin to see the market as an ongoing conversation between buyers and sellers rather than a series of random price movements. This perspective shift is essential to your journey as a trader. When you learn to recognize these early signals rather than chasing what everyone already sees, your entire approach to the markets undergoes a fundamental transformation. You're no longer reacting to news headlines or analyst opinions. You're responding directly to what the market itself is telling you through its own behavior. Behind every significant market move is this same pattern of accumulation. What makes our chart setup so powerful is its ability to filter out the noise and highlight only those patterns with the highest probability of developing into substantial moves. It's like having a decoder that reveals the market's intentions before they become obvious to everyone else. The obsession with buying at the absolute bottom or selling at the perfect top isn't investor wisdom. It's a gambler's fantasy. This mindset shift alone could revolutionize your results. Think of it like a train departing from the station, slowly at first, then gradually building momentum until it's moving at full speed. The gamblers are those frantically trying to jump aboard while the train is still in the station, risking everything to say they got the best possible entry. But the true wealth builders are patiently waiting on the platform, watching for clear signs that the train is definitely moving in their anticipated direction. Then, when the momentum is undeniable, but there's still plenty of track ahead, they calmly step aboard and enjoy the journey. They're capturing what I call the fat, juicy middle of the move, where the risk is lower and the profit potential remains substantial. If you've ever found yourself struggling to identify the difference between random market noise and the beginning of a genuine trend, type "seeing patterns now" in the comments. Understanding this distinction is where your trading journey truly begins. To transform, the beautiful paradox here is that by giving up the dream of perfect entries and exits, you actually increase your probability of substantial profits. Our chart setup reveals precisely when a trend has established enough momentum to be trustworthy, but still has significant room to run. It identifies that sweet spot where smart money has committed, but the general public hasn't yet piled in. This perspective frees you from the pressure of needing perfect timing and replaces it with a focus on recognizing established momentum. Behind the scenes of every great market fortune, you'll find this same pattern, not miraculous timing, but disciplined positioning in trends with proven momentum. What's fascinating about this journey toward market mastery is how it changes your perception. Where novice traders see random price movements, you begin to recognize patterns and intentions. Where others react to news, you anticipate the reaction because you've seen the breadcrumbs leading to it. This elevated awareness creates a profound edge that separates consistent winners from those constantly fighting against market reality. The transformation doesn't happen overnight. It requires patient observation and a willingness to see what's actually happening rather than what you hope or fear might happen. But once your eyes are trained to spot these subtle signals, they become impossible to unsee. You develop what some might call a sixth sense for market direction. This brings us to perhaps the most counterintuitive revelation in all of market speculation. The real money isn't made from the active parts of trading, the buying and selling. The wealth is created during the waiting. This insight completely transformed my approach when I finally internalized it. Most people enter this arena believing that success comes from clever entry points or perfectly timed exits. They're constantly searching for that magical indicator or secret pattern that will give them the edge. But behind the scenes of every great market fortune is a much simpler truth. The operators who accumulated vast wealth were those who could sit still once they had identified a powerful trend. Think about that for a moment. The hardest work in speculation isn't analyzing charts or reading financial statements. It's having the emotional resilience to hold your position while the market validates your thesis. It's about cultivating patience, not cleverness. I remember watching a position grow by 30%, feeling that surge of validation and the immediate urge to lock in profits, but the underlying trend was still intact. All the signals that put me in the trade were still present. The hardest thing I ever learned to do was nothing, to sit on my hands and let the position continue working. That single decision ultimately led to a 300% gain instead of a 30% one. If you've ever sold a position too early and watched it continue climbing without you, type "patience pays" in the comments. That simple shift in mindset, from focusing on activity to valuing strategic inaction, might be the single most important breakthrough on your path to consistent profits. Our chart setup gives you something precious, the confidence to wait. By identifying specific conditions that historically precede major trends, it provides the conviction necessary to hold through the inevitable fluctuations that shake out most traders. This psychological edge is often more valuable than the technical edge itself. Now, I Want to explore how this setup helps you decode the subtle language of the market itself? Because before any significant move, the market leaves breadcrumbs, subtle clues that most traders miss entirely. These aren't random fluctuations, but deliberate footprints of institutional activity and changing market psychology. The market whispers its intentions through increasing volume on up days, while volume diminishes on down days, through volatility patterns that contract before expansion, through subtle shifts in sector leadership and money flows. Our chart setup acts as a decoder, helping you recognize these whispers before they become shouts that everyone can hear. What's fascinating about this journey toward market mastery is how it changes your perception. Where novice traders see random price movements, you begin to recognize patterns and intentions. Where others react to news, you anticipate the reaction because you've seen the breadcrumbs leading to it. This elevated awareness creates a profound edge in your decision-making process that others simply don't possess. Let me share something personal, something that revolutionized my own approach. I used to believe that successful trading came from having the most sophisticated analysis or the fastest execution. But the breakthrough came when I realized that the market is constantly telling us exactly what it intends to do, if only we're willing to listen. It communicates through price action, volume signatures, momentum, characteristics and sector rotation patterns. This revelation creates a complete mindset shift. Instead of trying to outguess the market, you simply learn to interpret its language. You become more of an observer than a predictor, and that subtle distinction makes all the difference in your trading results. Imagine having the ability to see what's actually happening rather than what financial media claims is happening. While others are reacting to headlines, you're responding to the market's own behavior, its true intention revealed through price action and volume characteristics. That's the illuminating power of understanding this language. Examine the charts of any significant market move throughout history, and you'll find this same pattern. A period where the market was clearly telegraphing its intentions through specific technical fingerprints that most missed entirely. These signals were hiding in plain sight for those who knew how to interpret them. The wealth transfer always flows from those who can't read these signals to those who can. This is precisely why our chart setup focuses on identifying these specific technical conditions. It cuts through the noise and highlights exactly when institutional money is quietly positioning itself before a major move. When you recognize these patterns, you gain an almost unfair advantage, the ability to position yourself alongside smart money rather than against it. If you've started noticing these subtle market signals that you once would have overlooked completely, type "reading between the lines" in the comments. That awakening to the market's language is often the first step toward consistently profitable trading. Now, let me examine another fundamental market truth that our setup helps you navigate. Prices never move in straight lines. The path of a trend resembles a staircase, not an elevator, advances, pullbacks, and advances again. These natural fluctuations serve an essential purpose in market ecology. They shake out the timid traders who mistake healthy corrections for genuine reversals. It's during these inevitable pullbacks that most people abandon ship, surrendering their positions to those with deeper understanding and stronger conviction. The psychological impact of watching your position move against you, even temporarily, can trigger primal fear responses that override rational decision-making. That's precisely why most traders never capture significant trends. They simply can't withstand the emotional turbulence. Developing the discernment to distinguish between a normal retracement and an actual trend change is perhaps the most valuable skill you can cultivate. Our chart setup provides specific parameters that help you make this critical distinction objectively rather than emotionally. Is volume declining during pullbacks? Are support levels holding? Is the fundamental story still intact? Ready to spot these powerful trends before the crowd? Subscribe now and join our community of strategic traders who focus on quality setups rather than constant market noise. The journey toward mastery isn't about eliminating pullbacks. They're an inevitable part of market dynamics. It's about developing the perspective to see them as opportunities rather than threats. Each successfully navigated pullback strengthens your confidence in the overall trend and your ability to stay with it. One of the most liberating revelations I've experienced in my market journey is understanding that you don't need to catch every move to be wildly successful. In fact, the relentless pursuit of every market opportunity is precisely what keeps most traders trapped in mediocrity. The truth is, just one or two significant trends per year, properly identified and ridden to their conclusion, can make your entire fortune. This insight goes against everything the modern trading culture promotes. We're bombarded with notifications, breaking news alerts, and can't-miss setups that create a constant fear of missing out. This environmental pressure pushes many into a scattered approach, spreading their capital and attention too thin across dozens of marginal opportunities rather than concentrating their resources on the truly exceptional ones. Think about the consequences of this mindset shift. Instead of frantically jumping from one trade to another, what if you developed the patience and discernment to wait for those rare, perfect setups? The ones where multiple factors align: technical, patterns, fundamental catalysts, institutional interest, and sector momentum all pointing in the same direction. These convergences don't happen every day, but when they do, they often signal the beginning of those massive wealth-creating moves. It's like a treasure hunter who understands that digging hundreds of shallow holes will never be as productive as digging deeply in the few locations where all the clues suggest buried treasure. Your time, energy, and capital are precious resources. Allocate them where the potential reward justifies the effort. If you found yourself exhausted from chasing too many opportunities and are ready to focus on quality over quantity, type "less is more" in the comments. That pivotal realization could be the turning point in your trading journey. This approach also removes an enormous psychological burden. You're no longer pressured to have an opinion on everything or to be in the market at all times. Now, I want to go even deeper into this topic by exploring the mathematical reality that makes this approach so powerful. Here's another transformative truth that few ever internalize. You can be wrong half the time and still accumulate substantial wealth. Success in the markets doesn't require perfection, it requires discipline. By keeping your losses small and letting your winners run to their full potential, the mathematics of speculation work decidedly in your favor. This principle fundamentally changes your relationship with being wrong. Most people approach trading with the flawed expectation that they need to be right on nearly every trade. This creates unbearable pressure and leads to devastating emotional responses when inevitable losses occur. But what if being wrong isn't the problem? What if the real problem is how you respond when you're wrong? The essence of this wealth-building formula is beautifully simple. Cut losses short. Let profits run. When you're wrong, acknowledge it quickly. Exit with a small loss and preserve your capital for the next opportunity. When you're right, have the courage to stay with the position as it develops into a significant trend. This balance, this discipline, is what separates consistent winners from perpetual strugglers. Behind the scenes of every great market fortune is this same pattern, a handful of substantial winners that far outweighed numerous small losses. It's not about win rate, it's about the relationship between your average win and your average loss. When that ratio tilts dramatically in your favor, even a modest percentage of winning trades can generate extraordinary returns. The uncomfortable truth is that our own human nature actively works against our success in markets. This internal struggle creates a fascinating paradox that explains why so many intelligent, hard-working people still fail to capture significant trends. Our evolutionary programming, the very instincts that helped our ancestors survive, becomes our greatest liability when applied to market speculation. Think about it. We're naturally wired to run toward what feels good and away from what feels painful. But in markets, this instinct consistently leads us astray. We become greedy precisely when we should be cautious and fearful, exactly when we should be bold. The psychological blueprint is almost universal. When prices are rising and everyone's making money, our greed intensifies. We buy more, take larger positions, and throw caution to the wind, right at the moment, when risk is highest. Conversely, when markets are plunging and genuine bargains appear, our fear paralyzes us. We can't bring ourselves to buy what others are desperately selling, even though this is exactly when the greatest opportunities emerge. Perhaps the most damaging manifestation of this flawed wiring is how we handle winners versus losers. We instinctively sell our profitable positions too soon, eager to lock in gains and avoid the pain of watching profits evaporate. Yet with losing positions, we hold on stubbornly, hoping they'll recover and spare us the emotional sting of admitting we were wrong. If you've noticed yourself fighting against your own psychology in your market decisions, type "rewiring my instincts" in the comments. It's the first step in acknowledging this critical battle that happens within every trader. This deadly combination, cutting winners short while letting losers run, is the perfect recipe for mediocrity or worse. The revolutionary insight here is that simply reversing these natural tendencies, holding winners longer and cutting losers quickly, immediately puts you ahead of 90% of market participants. It's not about having better information or more sophisticated analysis. It's about having the self-awareness to recognize your destructive instincts and the discipline to act contrary to them when necessary. Our chart setup serves as an objective framework that helps override these emotional responses by providing clear, unemotional signals. Based on actual market behavior rather than our hopes or fears, it creates a buffer between your instinctive reactions and your trading decisions. This psychological edge often proves more valuable than any technical edge. Now let's explore a critical element of success that separates the professionals from the amateurs: the discipline of having a clearly defined plan before you ever enter a position. This strategic foundation is often overlooked in the excitement of spotting what seems like a promising opportunity. But the hidden truth is that most traders fail not because their analysis was wrong, but because they operate on feelings rather than rules. Think about your own experience for a moment. How many times have you entered a trade with a vague sense of "this looks good," but without any concrete parameters for how you'll manage it? Without predetermined exits for both profit and loss? Without a plan for what you'll do if the market moves sideways instead of in your anticipated direction? This ambiguity creates a psychological vulnerability that the market inevitably exploits. The transformation begins when you establish these boundaries before putting capital at risk. Knowing exactly how you'll act if you're right, and perhaps more importantly, how you'll act if you're wrong, creates a decision framework that protects you from your worst emotional impulses. It's like having a map and compass before entering unknown territory, rather than wandering aimlessly and hoping for the best. This preparedness doesn't just impact your results, it fundamentally changes your relationship with the market. When you have clear rules, the emotional turbulence of price fluctuations becomes significantly less disruptive. You're no longer making stressful decisions in the heat of the moment when judgment is most compromised. Instead, you're simply executing a predetermined plan with clarity and confidence. Let me share another crucial truth about capturing major market trends, one that might fundamentally challenge how you've been approaching opportunities. The reality is that significant wealth-creating trends rarely come from following the crowd. By the time the majority recognizes a trend, acknowledges it, and feels comfortable participating, the most profitable portion of the move has typically already occurred. This creates one of the great paradoxes in market speculation. To catch these powerful trends near their beginning, you must be willing to act when it feels uncomfortable, when your judgment and analysis diverge from popular opinion. Consider the psychological weight of this requirement. You're essentially placing your capital at risk based on a conviction that runs contrary to what most market participants currently believe. If you've ever found yourself hesitating to enter a position because nobody else seems to be buying this yet, type "conviction matters" in the comments. That moment of standing alone might just be the precise point where the greatest opportunity exists. Behind every major market trend is a period of disbelief when the emerging move is dismissed, rationalized away, or simply ignored by the majority. This is precisely when the foundation for enormous profits is laid. Those who can recognize the early signals and act decisively, despite the lack of social validation, position themselves to capture the full evolution of the trend. This willingness to be temporarily alone in your market view isn't about being contrarian for its own sake. It's about developing the independence of thought to see what others don't yet see, to interpret market signals without the distorting filter of collective opinion. When you learn to trust your own analysis and act on it even when it feels isolating, you gain access to opportunities that the crowd followers never experience. As we wrap up today's exploration of what it truly takes to catch those life-changing market trends, I hope you're walking away with a fundamental shift in how you approach your trading journey. Remember, this isn't about perfection. It's about patience, discipline, and the courage to act differently than the crowd when your analysis suggests a major move is forming. The one-chart setup we've discussed isn't just a technical pattern. It's a comprehensive framework that helps you identify emerging trends, stay with them through inevitable fluctuations, and exit only when the actual trend has changed, not just temporarily pulled you back. When you combine this technical edge with the psychological principles we've explored, you position yourself to capture opportunities that most traders only see in hindsight. If something in today's message resonated with you personally, drop a comment with "catching the big swing" so I know you made it to the end. Your experiences and perspectives help enrich our collective understanding, and I always take time to read through them. If you found these ideas valuable and want to continue developing your ability to spot major trends before they become obvious, hit the subscribe button below. Every week, we explore these deeper market insights that go beyond typical technical analysis. Right beside this video, you'll find our exploration of how to properly size your positions when you do identify these major trends, because finding the move is only half the battle. Click on that video when you're ready to dive deeper into maximizing your returns while managing risk effectively. The principles we've discussed today lay the groundwork for what we'll explore there. Until next time, remember that the market rewards patience far more generously than it rewards activity.